Welcome to a special edition of the QuantaCast. Today I've got Stacey Jones, our CEO, with me.
Hi, Tim.
Hi, Stacey. And our Head of Property Investment, Chris Carrigan.
Hi, Tim.
Now, before I start, Chris and Stacey, we're filming this QuantaCast for people that we've identified that we think would be interested in this completely different opportunity that we've got here at Quanta at the moment. Stacey, tell us really briefly, what this is all about.
Sure. So last year we saw a decline in transaction volume across the market, and with that came less opportunities for investors. But the demand from investors was still there. We still have our investors regularly contacting us to see what's coming up, when the next opportunity is going to be for them to place their money. So we went to the drawing board and thought, what is an opportunity that will be attractive and beneficial to our investors and can help lead us into some greater prospects for them to place their funds.
So, Stacey, tell me a little bit more about how it works in detail.
So we've come up with this concept, being the Investment Ready Trust, which enables investors to invest their funds with us, and they will go into a bank account with one of the major four banks at a rate that is 5 basis points below the then cash rate.
Which at the moment today in February is 4.35%.
Correct.
Minus the,
Yep.
So 4.3%. Yep.
So if funds were invested with us in February,
Yep.
investors would receive a monthly distribution. So February would be 4.3%. No Quanta fees charged on that. Distributions will be paid monthly, equivalent to the prevalent cash rate. And that enables us to establish a fund that provides a great opportunity to Chris and his team to go off and source new opportunities for investors to deploy their funds in. And Chris can talk about the parameters of that in a bit more detail.
Let's bring Chris in right away. So, Chris, Stacey says great advantage to have the capital sitting there to go into the negotiation phase. Talk to us more about, where you think the real specific detail in advantage is.
Well, the advantage is certainty for vendors. And that is very highly prioritised in the market at the moment, where there are vendors who have to sell as they're facing issues that a lot of funds are facing at the moment. So,
could I also say on that, Chris, there's also been a number of failed raises that are making people nervous in the market who are selling as well?
Yeah, there have been, and that they've been in various markets across Australia and various sectors, retail, office, industrial. It's been a characteristic of capital transactions this year.
Okay, so having this fund up and going and ready, which, in our conversations already with just a few investors, it seems to be popular. What other advantages are there?
Well, it just allows us to, when we're bidding on a property, to not be subject to capital raise. So that means if we've got fewer conditions and we provide additional certainty, then we're potentially going to be able to buy properties at a lower price and better returns for investors than we would if we were still subject to capital raise.
So, Chris, talk to us a little bit about the high-level metrics that the investment will have.
So, because there's a bit of trust in this concept, we've put in the IM some parameters about what we can buy and what we can't, so that when we do go to invest that money, we're not doing it at a return that's unfavourable to investors' expectations in a market that's unfavourable to investors, or in a sector that they don't want to invest in. Mm-hmm. So we set out those parameters and minimum distributions and the type of asset we will be investing in, and that gives investors some certainty about where their money will be deployed.
Can I highlight some of those with you, Chris, if
Sure.
That's okay? So we're looking at sort of distribution 8% plus.
Correct.
For the investment, and we think that's achievable this year, of course, as well. An IRR of 12% to go along with the 8% distribution.
That's equity IRR, yes.
Yep. Closed-ended fund?
Yes, closed-ended fund, single asset.
Yep, great. And I think for the way you think, I suppose, about investing around the country at the moment, you're generally trying to stay around metropolitan type areas rather than regional at the moment?
Yeah, I mean, we're not deviating from what is our acquisition mandate for this trust, as opposed to what we would normally, and that is we prioritise markets that are either capital cities or major metropolitan centres that have deep tenant pools, great access to contractors, so you get competitive pricing, easy access for management to deploy management expertise, etc.
Gotcha.
So same market, same sectors. This doesn't change any of that.
So back over to Stacey now. Stacey, I've effectively put my money into the Investment Ready Trust. What happens from there?
So the minimum investment term is 6 months because that provides us with sufficient certainty as to how long the funds are available for us to go off and make these offers. Investors can then, by something as simple as an email to Dave, say, I'd like my money out at the end of the 6 months. If they don't do that, it'll then continue to roll over for 3 monthly periods, and again can be withdrawn at the end of each of those 3 months periods thereafter. In the meantime, the funds will sit in the Big Four Australian bank that we deposit the funds into. Investors will receive units, as they typically do in our other investments, equivalent to the funds invested. When an opportunity is identified that fits the specific parameters that we've identified, we will redeem the units that investors have in the Investment Ready Trust and exchange that for units in the new trust at an equivalent value.
Thanks for joining us today, Stacey.
Thanks, Tim.
Thanks for joining us today, Chris.
Pleasure.
And we look forward to discussing the opportunity with you further.